Hi there, it's me again, Questions with Kaya, and I am joined with John Willis with Supreme Lending. A question that I get all the time is, what are loans? How does it work out? And right now I want to ask him exactly what an FHA loan is.
Good question. There are multiple programs out there, FHA being one of those. First things first, an FHA loan is a government-backed loan, okay? There's Fannie Mae and Freddie Mac, two of the lending agencies with the government that you can qualify for these loans. I will want to address one thing real quick. A lot of folks think an FHA loan is a bad loan. I don't want an FHA loan. There's a stigma associated with that. This is not true. My first loan was an FHA loan. What does it do? A couple of things that I'd like to touch on with that on an FHA loan. Obviously, typically, an FHA loan is reserved for a couple of different clients. Number one, those that have had, they've lived their life. Their credit score isn't the best, right? And life does happen. So with regards to your credit score, an FHA loan, typically with Supreme, we go down to 620. There are other lenders, I give some credit to other lenders out there with different programs, that will go down to as low as 530. Ooh. Now, I'll touch on that real quick. 620 folks and 530, that's a huge difference there. What are you gonna gain in that? Not a whole lot. What are you gonna lose? Well, your rate's not gonna be as good at 530 as it would be at 620. 620 seems to be a number that the industry has put out there, especially on lending. That's a good break point, a good stopping point. Anything below that, I just say we're getting into the weeds. Okay, a lot more has to be done on the lending side to approve that borrower at 530. So with that being said, I try to tell people, hey, let's just pull the credit and take a look at it. So if you do qualify for an FHA loan, again, what that does allow for you, some of the positives on that is you can put a minimum of 3.5% down on the purchase price. That's a great thing, especially for first-time home buyers. And the other thing that it really does help out with, it opens up your debt-to-income ratio, and we can talk about that on another show, if you will.
Next segment.
Yeah, next segment. But anyway, with that being said, it opens up that DTI number on the back end. What does that mean? Well, you've got two different numbers in your debt-to-income ratio. You've got your front end and your back end. Your back end is basically all of the debt shown as a ratio of your income. So it's called debt to income ratio. So obviously that's what it is. It's your debt to your income. With that being said, typically an FHA loan will allow you that back end ratio to extend up around 56 to 58 on the back end. Okay, that's very advantageous, and would explain that to each client on a client by client basis, because you just don't know what their profile looks like. But I told you I'd share the other things with all loans and FHA. It's not bad, but you have what's called mortgage insurance, private mortgage insurance. This stays with the loan for the life of the loan until you refinance out of a conventional. So, and just to touch on what is mortgage insurance real quickly, mortgage insurance is insurance that the buyer must purchase unless you put 20% down to basically ensure that they are capable of being money lended to them. If you default on the loan, then the loan is called and it's covered with that mortgage insurance. So hence the tie-in with a low credit score, a government-backed loan, FHA. With that being said, it's not a bad loan, but it does give you an opportunity to get into a home with not so great credit, if that makes sense. So that, in a nutshell, that's basically it for the FHA product.
Okay.
There's a lot more stuff that's in there, but the answers to those questions would be because this client has done this on their profile, or the credit once we've reviewed it. But again, in a nutshell, that's it.
Okay, I was like, I got to give you a follow-up question though.
Sure.
But back to private mortgage insurance. I know you said that once it gets to 20, if you put the 20% down, then you don't have to have it.
That is correct on a conventional loan. Okay. On an FHA loan, every FHA loan. Now you'll have reduced mortgage insurance if you put 20% down.
Okay.
But again, it's if you're able to put 20% down, I would more than likely put you in a conventional product.
Okay.
So with that being said, that's a great question, but yeah, if every FHA loan will cover or carry mortgage insurance.
Okay.
Mm-hmm.
Well, thank you.
Yeah, you're welcome.